Okay, so next is back to the question that was asked about what do mortgage lenders require? Jacques Laubert is here to answer that, and any other question. I mean, any questions you have about anything, any subject, Jacques will answer them. So, welcome, Jacques Laubert.
So a lot of people ask about flood when they come to sit down with their loan officer, because one of their biggest concerns is what is it going to cost? So of course we refer them back to a great agent like Jim to talk about that. But let's talk about a little bit about the rules that are incurred. And this is not up on the slides yet, so we won't get there yet. So prelim flood zones, banks don't care about them. Okay, we're only looking at the current flood zone. Is the property in a flood zone at this time? We're not looking into the future. However, many buyers do question, what's going to happen if my property goes into a flood zone? And that's where we have to defer back to the insurance agent to talk to them about that. And Jim will cover that as to conversations he may have with people about that. To put it into real terms, a $1,200 premium, which I think can be fairly quote-unquote common, of course it depends how the property lays in the flood zone, translates to about $15,000 in buying power. So $1,200 a year that they pay in insurance means they could go buy a property that's not in a flood zone for $15,000 more and have the exact same payment. Let that sink in for a minute as you hear some of those flood quotes come across your desk. And that's one of the questions we get asked by people and takes them by shock, is when they start talking about, well, I got the premium and it's $2,000, but the first floor has been nicely redone. Well, there's a reason it was nicely redone. And that's costing them the equivalent of buying another house that may be $15,000 or $30,000 more expensive. So remember that the conversations you have when you're out in the field with them are very different than the questions that they ask us when they come in. What we're going to talk about is what our flood insurance rules are. And at Homestead Funding, we don't have any add-ons. So the government mandates through their rules, through Fannie Mae, Freddie Mac, USDA, VA, FHA, Sunny Mae, all those wonderful acronyms, what the rules are for flood insurance. And they're actually rather simple. If you're in a flood zone, you have to have flood insurance. Simple and cut and dry. There are certain exceptions that we can do certain things, so we'll go a little bit into that just so that you're aware. So is there a situation where a property is located in the flood zone and will remove flood insurance? So in all cases other than VA, we do not require flood insurance unless the primary structure is in the flood zone. Now, a primary structure is defined as the house and the garage. If the garage is attached or considered to be a major improvement, then you're going to be required to have flood insurance. So sometimes, many times, we can exempt a property just because the back end of the property is down up against a creek and the house is 100 foot up. If the house is not in a flood zone, there's no flood insurance required.
Jacques, you want him to be moving the slides?
Oh, yes. Yep.
Just stay up with me.
Okay, there you go. Next one down, please. Thank you. This is an interesting part. If you don't have, yes?
Is that going to require an elevation survey?
So an elevation survey is a mechanic of the insurance agent if they're writing flood insurance. For us to prove that the structure is not, the flood certification company of the bank, which is hired as an outside vendor, checks the map to see if the structure is. They take it and they blow up those maps that you're looking at online and they look very carefully. So they're not going to use an elevation certificate. If they come back and they see that the map shows that property, that house is in the flood zone, you'll be required to have flood insurance. The only way you're going to remove that property from needing flood insurance is to, usually post-closing, go back, bring an elevation certificate, and then file for a LOMA, which Jim will, I'm sure, cover in his presentation. But from the bank perspective, if you're in according to the map, you have to have flood insurance. Doesn't matter how high your house sits. The elevation certificate will help in reducing the premium, but you'll still be required to have flood insurance. This is an interesting one that many people come in and they're putting down. We're seeing more and more cash deals. Of course, everyone notices that. Us bankers don't like that. But hey, it is what it is. And then we're seeing a lot of people put down substantial money on houses and waive their escrows because they don't want the greedy banks earning that 1% interest, lending out their money that they put in escrow. But if a property falls within a flood zone and they are getting a mortgage of any type on that property, they are required to escrow for the flood insurance regardless of whether they have escrow or not. So even if they're putting down 50% and they say, hey, we're going to pay our own taxes, we're going to pay our own insurance, they can pay their own homeowner's insurance, they can pay their own property taxes, but their escrow has to include it. And that's a federal protection put in for the borrowers that they know that their flood insurance is being paid and that the bank knows it's being paid. Next. A lot of times we're seeing now private flood insurance coming into play. I think he touched on that NFIP paid out a lot of money and is in the negative, and as Jim, I'm sure, will talk about the premiums escalating. So some private companies have started to come into the market to write flood insurance. And so we have some private companies that are doing it, and every type of loan will allow private flood insurance except FHA. That's the only one. It has to be through the NFIP, which is your standard. One of the things that I talk to people about, and I'm going to tout Jim's horn here, is that when you get a quote for flood insurance, it's very important that if you choose to get a second quote, it's beyond me why you're doing that, because the premium's going to be the same no matter where you go if it's being insured through NFIP. What that's telling you is that the two agents are giving very different coverage limits to the borrower. And that can be very big. And I had a nice young lady who was a single mom, 3 kids, worked very hard. Just before 2011, she closed 1 week before the 2011 flood, moved her kids into the house and everything, and the whole house flooded. She had received 2 quotes. One was very different, and Jim's was more expensive. I, needless to say, told her to go to Jim. And she was very happy she did the next week when our house flooded and her oil tank and everything in the garage turned upside down, which technically I believe condemns your house. And Jim was able to not only get everything in that house fixed, but replace everything, and she was as happy as could be. She moved back in after about 6 months worth of construction on her house, and she moved in, and about 1 month later, the storm came through, hit a tree, and went into her house. I'd be the heck out of there. But she stayed, and Jim's insurance kicked in and paid very well, and she rebuilt for the second time. Okay? She had a big difficulty selling her house. Wonder why.
Jacques, if I could just add that those 2 unfortunate events had nothing to do with her being insured.
Well, that would be true, yes. Yeah. Absolutely not, yes. You did tell me not to put the gas can in here, right? Okay, never mind. Okay. All right, so let's go on to the next slide. So what are the requirements for flood insurance? Many people seem to think it's the replacement cost of a house, and some banks will tell you that. That's their internal rule. That is not a rule for mortgages. So the mortgage rule book says that it can be just the balance of the mortgage. So if they're buying a $300,000 house and they get a $50,000 mortgage, they can have a $50,000 flood insurance policy. And they can do that. Many people choose to do that. I don't know why, but hey, if you want to do it, go for it. But realize that when they're going to their bank, if they're getting different answers and they're not happy with them, then they need to switch banks. They can call me. The big thing is the deductible, and I think that's really a big point. We can take up to a $10,000 deductible, and that's very large because in the scheme of things, a flooding usually is a major event. So we can do up to a $10,000 deductible, which can help to reduce their premium to the point that it's a little bit more affordable for them. And I feel really bad because I've been doing this 20 years, and I have a lot of people that I put into flood zone homes back when the government was subsidizing premiums. And now those premiums, as we know after that Bigger Water Flood Act became unaffordable, realized that many people were in danger of losing their houses because the government said, hey, we're going to stop subsidizing this, and we're going to charge you the full premium. And many people saw their premiums skyrocket and realized that the side effect to that is not that their flood insurance is getting canceled. because a bank is required to keep that flood insurance in place. It now gets added back into their mortgage when the bank reinsures it under their policy, and when they don't make the payment, now they're getting foreclosed on. So we have to think about our buyers at all times and making sure that they're aware of what is flood insurance, how much does it cost, and what is the future of it. And going back to the preliminary flood zone, I get that question so much from people because they're concerned and they want to know what the future holds. So we need to keep that in mind. Even if a property is not in a flood zone today, it is a question that's being asked. That's really all that I have. Are there any questions relating to flood? Yes, Dave.
The question that I have that comes into play, and I don't know if this is a banker's question or an insurance question.
Definitely Jim.
Okay. So we have a property that is not in the flood zone, but it flooded, and there's been a claim or two on that property. And then the bank says, we want to have flood insurance on it, even though it's not in the floodplain.
Time to change banks. It's not a rule. It's not a federal rule for a bank. So that's their internal rule that they're requiring flood insurance. So because a property flooded 3 times, 1 time does not matter in the banker's eyes. We are only supposed to be looking at the flood certification that is coming back to us. So if it comes back as not in a flood zone, then there's no flood insurance required. Period. If they,
Could I clarify but if a specific bank, like you said, has an internal rule.
yep, they can have an
they
internal
say,
rule.
We've looked at this property and we are going to require flood insurance in order to originate this mortgage, that's their internal rule, and that's not illegal.
It is not illegal, but that's a condition of their lending the money. So my advice to your buyer would be, change banks if you don't want to have flood insurance for your life. Because remember, they're not going to change that rule next year. They're going to closing and signing a note that says, we agree to maintain flood insurance on this property. Likewise, if a property is not in a flood zone and the preliminary maps come into effect, all the people that are in the preliminary flood zone that get turned into a flood zone will now be required to purchase flood insurance. There is no getting out of it because they were exempt before. If they're now in a flood zone, they'll get notified usually within 60 days of the flood zone map becoming effective that they'll have to buy flood insurance. Yes, Rob.
Which stage of the application does the lender actually do the flood zone?
Well, that differs from bank to bank. We do ours up front when we open the file. So when I don't check it because, hey, I'm not an expert at it. So when a file goes into opening in my department, and my team opens it, they are ordering the FHA case number, they're ordering the appraisal, they're putting the file into process. They will do a flood certification check, and if it comes back in a flood zone, they will then notify the loan officer. But every bank does it differently. It can be something that's done right prior to close. I've seen some that do that, and that's a horrible process because now your buyer's being notified just before closing that they need to have a new premium of $1,200 a year added to their payments and cash to close, because remember, they're paying a year of premium at the closing table to close. Any other questions? Good.
So when you said that if you shop agent to agent for the flood insurance based on the NFIP, that the coverage shouldn't change dollar for dollar. So if you're borrowing $100,000.
Well, it depends on what coverage they're putting in for contents and what coverage they're putting in. I'll leave that to Jim to do, but there should be no difference in the premium.
And the deductible.
And the deductible, so there's all the facets that go into the quote. So if they're getting differing quotes, their coverage is different. It's not like homeowners where one company may be more favorable than the other. Jim's is always more favorable. But, any other questions?
Anything else? Okay,
Okay,
Jacques,
thank
you
you.
very much.